straight go into the. So today, let's take a closer look at the 2023 performance and the investment ideas of Menara Nusantara, which is a key player in the telecommunication infrastructure sector. Next. So first, let me briefly give an overview of the company itself. So TOWR is a telecommunication tower company owned by Jarum Group, and it was founded in 1995. As you can see, TOWR's core business is primarily tower leasing business. So it generates revenue by leasing towers to telecommunication companies such as Telkom, Excel, and also recently it has been aggressively expanding its fiber cable business, which is they're transforming into an infrastructure company spanning the telecommunication sector. So next. Okay, now let's dive into TOWR's operational performance for the year 2023. So TOWR's revenue in 2023 increased by 6.4% year on year. However, there's some noteworthy aspect of this revenue growth is the slight decrease in tower leasing revenue, but also coupled with a significant increase in revenue from the new revenue stream, as I mentioned, the fiber optic cable business. Although the decrease in tower leasing revenue may seem disappointing, the reason behind it is quite straightforward. So it is due to some price adjustment made during the recent lease renegotiations with some telecommunication companies. And also, management mentioned in the earnings call that there was some repricing during the recent contract renewals with telcos, which they explain as the main reason for the revenue decline. Despite somewhat disappointing performance in tower leasing revenue, TOWR exhibited remarkable results in the fiber optic business. So TOWR's fiber optic revenue grew by 63.7% compared to the previous year. Through this recent operational performance, we can observe that TOWR's strategy of revenue diversification is progressing well. Next. In 2023, although TOWR's overall revenue increased, its profit margin decreased slightly, actually. So the most significant reason for this was an sudden exceptional increase in depreciation and amortization expenses in the fourth quarter 2023. This was because TOWR applied the accelerated depreciation method to some assets in the fourth quarter. Another reason was continued increase in finance costs. So since acquiring Super in 2021, TOWR's financial leverage has increased significantly, resulting a continuous increase in finance costs and exacerbated by the recent period of interest rate hikes. Okay, next. Okay, now let's discuss some of our investment theses for TOWR. So the first point that I want to highlight is that TOWR is rapidly diversifying its revenue streams compared to its competitors in the sector. So as I previously mentioned, TOWR's fiber optic revenue grew by 63.7% this year, which is accounting for around 16% of total revenue. So given the importance of the fiber optic business in Indonesian telecommunication sector, this trend is very positive for TOWR. The second point is TOWR's capital efficiency. So among its sector peers, TOWR has the highest ROE. So as of 2023, TOWR is the only company with an ROE exceeding 20% in the sector. So therefore, we believe TOWR is very fundamentally healthy. Next. Okay, so however, then you may ask, if TOWR has such strong fundamentals, why has its stock price been declined recently? So the answer is simple. It lies in interest rates. The telecommunication infrastructure sector is a very classic capital-intensive industry. So the most significant characteristic of capital-intensive industries is that they require a substantial amount of investment for business expansion. So in this case, there are two ways. So the capital has to be raised internally or externally. However, when the cost of raising capital, in other words, we call the interest rates, increases, and it naturally has a negative impact on the stock price usually. So the chart on the right shows the correlation between interest rate and TOWR's stock price movement. So as you can see, there's a close relationship between interest rate movements and TOWR's stock price. So therefore, when investing in capital-intensive companies like TOWR, not only fundamentals, but also the direction of interest rate is very crucial. Next. Okay, now let's get to a conclusion. So overall, we still maintain a positive view on TOWR. So the reason for this is that TOWR is successfully diversifying its revenue stream and has the highest ROE among its sector peers. Of course, as I mentioned, there are some concerns. TOWR stock price is closely related to interest rates, and the outlook for the recent interest rate cut is gradually fading, which is somewhat worrying, but I think it's okay. However, we remain positive on TOWR in a long-term view, because interest rate cuts are a problem of timing, but they are already foreseen in the future. And currently, we believe it is trading at very undemanding valuation considering its fundamentals. So I think it's a good time to look over its stock price in terms of investment. Okay, thank you. Get back to you, Glenda.